Hi, friends, welcome to another backtesting session where I'm focused on backtesting years of data in a short amount of time to get in thousands of reps. Now, I'm uncovering some super interesting secrets to January so far. What I'm basically doing, you can see my 3 backtesting sessions here at the top. They're just January. So here is, it could end up being a full year, but here is my P&L for January 24, 23, and 22. So I'm down 2R in the first 2 weeks of January 2024. I'm down 5R in the first 2 weeks of January 2023. And then in this session, we're going to do the second week in January in 2022. Now, I've already seen patterns emerge, and I'll show you here real quick, basically. Well, I guess I could just tell you, but ultimately, there are different patterns that I'm observing. The first week of January, I am better off not trading. It just, when I also look at not only what setups do I take, and I look at what setups I don't take. And that's important because sometimes it's just a matter of selection. You choose the wrong setups to take that week and you end up with a red week or a break-even week. And had you taken different setups of your same setup, ones you hesitated on, or maybe you weren't in front of the charts, then maybe you would have had a break-even week to a green week. But what I'm doing in this test is I'm looking for all of the setups. I'm classifying them as A or B setups. I'm taking mostly the A setups and ignoring the B setups. And now that's an important thing, because what I noticed is in the first week of trading January, A's or B's, I wouldn't have been profitable. We can see I'm break even on this first week of January. I think there was 1 trade for this first week in this current session that we're going to do today. However, what's interesting is I started noticing that the B setups were working in the second week of January. And so I started kind of mixing it a little bit where I would select some B setups. But what was super interesting, and I'll show you this here. So I'm tracking by day. If I was, January 8th, if I was red, green, or if I didn't take any setups. And then I track the missed opportunities in the B setups I didn't take. So for example, on this day, I took 2 what I thought were, close enough to A-ish setups, and I had down 2R. Nothing would have won, so I was down 2R. Now on this day, there were 3 of my setups that were A+ but didn't have an SMT, so I didn't really consider them as viable trades to take. I maybe could have considered them as B trades, in which case this would have been positive 6R. And you can see at the end of the week, I would have been up 7R, right? Instead of down 5R. So I don't know. I'm not going to, they were perfect without SMT, but nonetheless. And then on this day, I took 1 expense, but there was 1 profitable B trade. So had I taken them both, I would have been up 2R. This day, I didn't take the B trade. I would have been up 3R. This day, I took 2 losses on an A and a B setup, and I was down 2R. So ultimately, I know it doesn't show on this chart, but I'm down on this week 5R by cherry picking my setups. Whereas if I just would have taken all of them, I would have been up 1R. So that's a 6R difference, right? -5 to up 1R. If I would have taken all of them. So what it appears to me so far, and this has been true for 2 of the Januaries, is on the second week, you're better off. I am better off not trading or taking all B setups without cherry picking. So I'm kind of mixed on what I'm going to do here on this current backtesting session that we're going to do. We're going to do 2022, and I think it starts with January. Where we got January 10th. Do I adhere to my normal rules if I take only A setups, or do I shift it and take all B setups and see if I can get a positive P&L? Ultimately, the pattern is starting to appear and emerge, and I'm interested to have discovered that. And here in this session, I guess we're going to find out if the third time running through a January's second week, if the pattern is going to hold true as well. Now, I had little expectations for the first week for certain. It's non-farm, it's January. I had not great expectations for the second week either. Rolling into the third and fourth week, maybe more of an expectation, but not tons. So yeah, I guess that said, let's dive in. Let me get rid of my face. So So yeah, just to figure out where we're at, we're break even on this account with one trade. I'm running an $800,000 balance because it emulates what my accounts are copy traded, even though it's not what I see on my screen. Obviously, I'm going to trade with one account on my trading view screen. Um, and but I just wanted to test the psychology here, see what it's like to see multi-$1,000 losses and wins. Oh, real quick, I use TradeZella. I really like it for back testing. It's one of the more robust softwares. I've tried them all, and it's as robust as the best one, I think, which is FX Replay. But what I like about TradeZella is for the same cost as FX Replay, you get back testing, plus you get trade logging and trade data, so it automatically collects all your trade data and gives you valuable insights. Like I've learned there's certain time windows I just shouldn't trade where I'm not profitable. You can tag your setups and figure out patterns behind what setups work and what setups don't. Links down below. Also, if you want to come hang out in my Discord, there's a link to my free trading Discord, and that's down below too. So yeah, those announcements aside, let's dive in. Here we go. And just taking a look at the news for this week. So Tuesday we have a Fed Chair Powell testifies. We have CPI, PPI, and retail. So we only have one red folder that's going to affect this trading day. Well, let's get into it. All right, so zooming out, what do we got on the weekly? We're on MNQ, which is the micro NQ. With these size of accounts, of course, I should be using the NQ chart. I'm aware of that. I just kind of set them up that way because in real time, I only trade MNQ. So it makes it a little more cumbersome to place orders because you're like, oh, 80 micros or 90 micros, and you got to sit there and futz with it versus 8 minis or whatever. So on the weekly, looks like the consolidating. These are all-time highs on NQ. Let's look at ES. ES is looking a little bit nicer, just pushing bullishly to new all-time highs. YM, on the other hand, let's see. Same thing, all-time highs. We are forming some weekly bearish SMT, but at least YM is not consolidating. So looks like ES is actually the strongest. Maybe? Yeah, ES is the strongest. YM's in the middle, and NQ is the weakest, which is typically ES is not the strongest. So what year is this? 2022. Okay. So yeah, we got weekly consolidation, no bueno, not fun. On the daily, we got consolidation. However, price action looks like it's cleaning up. We have bearish SMT, and it inverted this gap here on the daily. Looks like the 5th of January. So I'm gonna. I want to pick this as the draw on liquidity for the week and the day. The week was probably actually more like this gap, the consequent encroachment of this gap. I really don't like being bearish at all-time highs, but the daily had an inversion and is close to having a change in state of delivery. Well, there was a daily change in state of delivery right here. You can see this candle closed below that candle. So that's an order block. The change in state would come with a close below this. And did it? I think it did. Let's find out what time it's at. So this is Friday at 4 in the, okay, so we do need to go to the next session. That'll help out. I like that because that'll give us some more data. And we'll zoom back out to the daily. All right. So the daily did form a change in state of delivery with an inversion. The draw on liquidity has been met. So in this case, these equal lows are my draw on liquidity. We do have this fair value gap above. So price, after taking this swing, it might want to come back into this gap. So it took this low right here. It's possible it could want to come up into here for some bullish delivery before coming down here. Or given that we're just bullish, this sweep here, so in bullish price action, we assume that the sweep is a manipulation. And let's take a look at the other assets now that I've seen that daily closure and see if we have any bullish SMT going on. So we do have bullish SMT. So I'm going to remain neutral in my bias on the higher time frame. It could want lower, it could want higher. I'm not totally sure because I want to stick with bullish because that's for certain the monthly and the weekly bias. But let's zoom in here. Let's look at the 4-hour chart. The 6 a.m. 2 a.m. candle I like to look at didn't really do anything. The 6 a.m. is just distributing. Do we have any news? Monday was no news. So 1 hour, we do have a lot of trendline liquidity building above. Let's mark some of these things out. Let's look at the 15-minute. Look at London took Asia's low and high. So that's signaling the possibility of seek and destroy. Keeps happening a lot here in January, it seems. Here's 9:30. And yeah, we'll just play some candlesticks forward. So kind of making this bit of an accumulation zone right here, pre 9:30, just swept it. A little bit of a volume imbalance, or 9:17. All right, 9:30 just tends to just rip one-sided. So here we have some relative equal lows, a little bit of trendline liquidity. I'm not confident it won't smack down. It did take this low. I guess the question is, I don't even have a model in here, so it doesn't matter to me. Look at that. Pointing out those relative equal lows down there, and it smacked them. All right, so what I think I'm going to do on this, I'm going to take all B setups too. I'm not going to cherry pick. Not clean. See these candles. Look at how big these tails and wicks are. Just consolidating. Forming a 15-minute gap up there, keeping an eye on that. All right, so this drawn liquidity has been met. I'd love to see it form an inversion because I would long that. Okay, coming for the next low. Here's a breaker, no inversion though. All right, tapped into that drawn liquidity. Okay, here's a breaker, no inversion. Some ugly consolidation. Not even seeing short setups. $10.50 macro. I mean, this is so ugly, I can't even consider this a model. I don't think. This whole, so there's this volume imbalance, IFVG, combine them. All this liquidity below. And really, so this is just the Let's draw this daily gap out. So what do we have? We have a 15-minute C2, lower low, 15-minute C2. We have equal lows in a 15-minute C2. So here's a very ugly, like not even, that's just, that's not even a setup. It's gonna run, watch. It totally does. Wow. So I guess, does this mean no matter how ugly, I should take them? Wow. All right, lesson learned. No matter how ugly, I should take it. Oh, funny. Like that's the ugliest setup I think I've seen in this second week in January, uh, between all the years. Oops, was I clicking too fast? Because here was a, um, no SMT. So this doesn't meet any of my rule requirements. So no short there. Coming close to the end of the AM session. So down here is a 15-minute fair value gap, keeping an eye on that, but there's not going to probably be a setup. So 12 o'clock here. I end at 12. Okay, so let's go to the PM session, I guess. My brain just shorted out. PMs. There we go. So here it came down to that 15-minute gap during lunch. So let's look at that even. Super ugly inversion. Just ugly, but look at it. So 1 o'clock. Let's mark out the lunch. Here's lunch high, lunch low. Although I guess that would be lunch high still up here. All right, so here we are, 1 o'clock. So here's probably the reversal. 130 coming up, so delivering one-sided. And the 2 o'clock is important because that's the new 4-hour candle for the PM session. So here we are. We tapped into this 1 hour gap. It took these relative equal highs here on the 15-minute chart. We have some bearish SMT forming. It's not confirmed until this candle closes, which I guess this candle is going to close here in like 4 minutes. So here's a short. And it's against the bias for me. I don't feel like so this is where my bias would tell me not to take the short more so than it being ugly. It actually is not the worst, but so we have this whole 1 hour gap to fill in. So, and all this liquidity built up from lunchtime. So, I mean, this is an IFVG. Maybe it's an A or a B plus. It is a 1 hour fair value gap it tapped into, 1 hour liquidity it took. It has, high probability is trend line and equals. I think so. Let's take a look. Right there. Well, not quite equals. A lot of trend line. We have session below. Cons against order flow and bias and drawn liquidity. Opposite drawn liquidity met might be reversing, but what do we got? A 15-minute. So we don't even have a 15-minute C2. We have a, looks like we'll have a 5-minute C2, but no C2 candle. Trend line and session. So watch, this will get stomped on because that ugly one didn't get stomped on. We are in the macro. And I'm assuming here, some part of the logic, the narrative here, is that the 4 hour is going to open up, trade down before trading up. So that's kind of what I'm expecting. Open, high, low, close. Could be wrong because it could open, take this liquidity out, then come down, then form its reversal, and then, you know, continue on. So it's possible, but you never know. That's just how trading works. And then internal relative equals. But I'm going to do my best to try to take setups that I doubt because I just am interested to see what happens based off what my findings are. And really, the way these candles are moving might give it a little bit more. I don't think it'll change the trade a ton. A little more than I thought. Because it might want to come up, retest this gap. So I'll give it that much room. So let's see. 50, 80, 60, 50, 45. All right, we'll just do, I don't know. I do want to note we missed one long. Did I already notice? Did I already note that? Like so ugly I couldn't even do it. Okay, offsides. All right, so here's the 2 o'clock candle. And ultimately that is all it wanted, is it just came back down into that gap. Probably not even a 5-minute gap. And it's just ripping higher. Now it's just kind of floating higher. So here's an inversion outside of the macro though. So here's an inversion breaker. Coming into a 1 hour fair value gap. And really we're below, I don't want to short. So what do I do about that? I guess if I take all B setups, but what about when I really don't believe in the bias or believe in the setup direction? So we do have bearish SMT. The 1 hour formed a change in state of delivery. The 4 hour is almost rebalanced. There's a little bit of a gap here. Let's see what the other assets are doing. Very similar. So this is one of those instances where it's like you may get away with a short. Just for a retracement, you're going against order flow. And I could just do this kind of thing. You know, the who's in profit right now? The afternoon buyers are in profit. So logically, it makes sense to take some of them out for continuing higher. Now, it also, and this is why I don't like going against order flow very much, because look, you're gonna pick the top? Like, really? Although I guess I pick bottoms right here. So we do have a breaker, IFVG. We have a SMT. We have a 1 hour fair value gap. We have a 1 hour liquidity sweep. We have SMT. Or no, we don't have a 1 hour sweep. We just have a 1 hour fair value gap. Or well, technically, yeah. So there's a gap below as a target, this inversion. In terms of high probability equals session and trend line, and we do have some of these relative equal highs lows right there. So we have that as a significant target, on significant internal target. We do have some tailless candle right there, a little bit of trend line. So this is still just a B trade. Now the cons, I'm against 1 hour order flow. This is with daily order flow, but at potential reversal level. And we do have a 15-minute C2. We do have a 15-minute C2 that supports the idea of expanding lower. So let's just see what happens. All right, so here's 1Rs right there. It just took those equals. So I'd go break even on this. Okay, so that trade was a break even. And that's, for my rules, I say 2 trades per day, including a break even. So here's a breaker, no clear inversion though. And I guess it's the end of the day anyways. Is that the 3R target? No. So break even on that fella. So here it tapped into this 15-minute fair value gap. Here was an inversion. I'm curious if this one had any SMT, because it's always easier to do it this way. So here we did have SMT on this one. I missed that one, or rather, my rule is 2 a day. So what would this have been? So this was, let's just say I closed above the 140 tick stop. So this, I could have marketed in. I don't think I would have done that. So looks like it gave 3R. So do I count it as a trade or not? That would have been presented itself. Because had I marketed in, I would have put my stop right there. Crazily enough, it would have given 3R. I'm just trying to, I want to collect the data. So January 10th, I was red. I took an expense times 1 on a B setup. What would have won? I think it was a 1030B setup. So missed opportunity was 2R. My performance, I'm going to give myself a B because I took B setups. Other notes, delivery. And I guess well, that was the lunch hour, so that doesn't count for me. Do I count this? That was a 1030, 1050B. Kind of. It was like it was a 15-minute gap. Yeah. So we'll say yeah. So that was missed opportunity of another 3R, so that's 5R. So it could have been a 5R day if I would have taken all three. I took the one loser. All right. Let's see here. That's not right. All right, so let's continue on. That's wild how that plays out so there are three setups. I didn't take the one that was a winner. I took the two that were losers, and I'm down 1R on the day. Could have been up 2R had I taken all of them. So wow, this one was just so ugly I couldn't do it. Like it was more of a consolidation than it was my model. And I've seen this time and time again where these just don't work. Or they're very low probability, rather. I can't say they don't work because sometimes they do. And I almost feel like when price is bearish and or in lower probability conditions like January's, I feel like these ugly ones work. But that's really counterintuitive. So let's go to the next day open and see what we got. Let's zoom out. News today. We do have 10 a.m. news. So here on the daily. So we swept that low. We closed a daily C2. So this daily candle closed within this previous C1 candle. We call that a C1 once we get a C2. And here on ES, it did the same. We don't have a C2 candle on YM. So we do have bullish SMT on the daily. So what we had this draw on liquidity was this. Remember, I had deleted that accidentally, but the weekly draw on liquidity was met. So what do we have now? We have this imbalance up here. I'm assuming that any sell side sweep is bullish until proven otherwise. It's hard to judge because like here we have a weekly change in state of delivery. But we can also see here was a weekly change in state of delivery, but that failed. So I'm going to have a hard time flipping bearish, even though it is starting to look bearish. On the daily, we have a bullish C2. So at the very least, I can think we're going up into here before continuing for more sell side, if it is indeed bearish. So we have that. We have a 4-hour change in state of delivery with an inversion. The 2 a.m. candle. It did stop hunt these relative equal highs. So I could see it wanting to come back down into here before continuation. We still have this trend line up in here. On the 1 hour, looks like it wants to retrace. Doesn't have to, because here's the breaker, and it could just come down into here and continue. So ideally, for a long, I would like to see it come back down into equilibrium. All right, so it looks like London took Asia's low and high again. Coming back down to 12 a.m. And we have 9:30. We have a red folder. Oh, it's just 12 a.m., whatever. So let's start clicking forward. Okay, 9:30 pushing down. I like that. That's all right. So what do we have here? We came down into this upper fair value gap. This might be a breakaway gap because this candle closed really high above there. However, it still could retrace down to that breakaway gap. Doesn't have to not. All right, so no SMT with ES. No SMT at all at this level. Just looking again real quick. All right, it's a nice looking inversion, but no SMT. Okay, offsides anyway. What do we got now? Here we have yet another inversion. Here we do have an SMT with these lows. There, NQ and YM. So we are inside the macro. It formed the breaker. We have a news upcoming. We're responding from the 1 hour fair value gap. We have not a 15-minute C2, but we have a 5-minute C2. So we have IFVG. We have a 1 hour fair value gap that we tapped into. We're in the macro. We took 1 hour, 4 hour liquidity. We're in a 4 hour fair value gap. So 1 hour, 4 hour fair value gap, 1 hour, 4 hour liquidity. We're in the macro. We just have tons of trend line and equals. We have gaps. We have about everything above. and session high. So we have high probabilities about everything. All right, so this is a B IFVG. We have a red folder incoming. So it formed this breaker. I guess it's an IFVG breaker. We do have local trend line. Cons. B setup. Local trend line. This one could go either way. There's so much liquidity up above that I'm okay with using a marketing in without a retracement because it just might leave. So I'll do a stop loss below the IFVG and 3R. That. We do have a 5-minute C2. And in terms of, so it's with the 1 hour order flow, with 4 hour against daily. So it is 1 hour, 4 hour, SIST with order flow, but cons against daily, weekly order flow. All right. Just see what happens. Buy 20, there we go. And hopefully this was the low put in right before the red folder, and the red folder can just expand price. Brutal. Oof. So here, let's see if this goes. Here I would have been better off waiting for the retracement. And I could have, I probably still would have been stopped out no matter what. Because I would have used that body probably. Probably not that swing low. Anyways, let's see what happens. Sideways. And this would have been break even for me. So this ultimately was stop loss 2, close, which keeps happening too. $10.40. And thinking. So here is now seeing this in hindsight. There's this inversion, ugly as heck. Wonder if there's SMT. I'd have to pull it up side by side, but well, it's important. I guess we should see if that was a, so there's a 15-minute fair value gap. Was there SMT? Yes, there was SMT. So this is a valid short, an ugly AF short. I didn't even like, I just saw it as a consolidation. but this is similar to the other one. And here I would have lost. So this is a losing B setup. In 16, 1025, I probably would have done this and I would have been stopped out. So here was, so this is just ugly. 15-minute. So 1 hour, price has already reused that 1 hour gap. There is no 15-minute gap. So like here's another inversion. I'm not, I don't have any levels here, I don't think. Because price already tapped into this 4 hour fair value gap. It didn't, unless we have a bullish SMT here. No bullish SMT. So not really a valid setup. And it rips. Look at how this one messed around, came back down, did the stop hunt. This one, you just mark it in on close and no retracement whatsoever. 1050. If this had an SMT down at the low, then I would count it. And a level. I don't. It didn't sweep this 1 hour candle. It did, you know, this gap here. It did reclaim that gap. Gosh, that's a tough call. I'm going to let that one go. So I'm not going to count this one. I'll count this one as a loser. And coming up to 12 o'clock here. So 15-minute chart. Let's look at, let's go to like 130. And maybe we'll go to right there. Shoot, I did I go one too far? I did. So here's a 15-minute C2 candle. It didn't tap into this gap. It did tap into that 1 hour gap. There is 1 hour SMT forming. That would have been outside of macro, so that's not a valid trade. So here's a 15-minute continuation short, which feels offsides. There's bearish SMT, but there's all of this imbalance down in here. There's equal lows. So this is another B setup. I'm more bullish than bearish for sure. Like this 1 hour candle tapped into this gap. And I'd much prefer to wait for the long, but if I'm telling myself I'm taking B setups, like that's what I got to do, I guess. So here's a short. So this is a 15-minute continuation. IFVG is a B. It has SMT, 15-minute level. We have equal lows. This is a target. We're in the macro. Cons, this is a B setup. This is against 1 hour, 4 hour order flow, possibly against daily order flow. I'm going to against daily C2. So there we go. Let's see what happens. Coming for me. Oh, we're consolidating, but either way, probably coming for me. Okay. And that's 2 for the day. We'll play the candles forward. See what happens. So there's the long. There's no model there. There's a breaker, but not an inversion. So cool. So that's roughly the end of the day. 310. So what happened today? We had two expenses and okay, so going back, I'm looking at the yesterday on the 22nd. I executed 1B and I didn't take 1B. So there's two trades. I executed one and it lost. I didn't take one and it won. And I don't know why that one was a B, but here we have a red day. And expense times 2 on the B setups. And what would have won? Nothing. Because this would have been an expense too on that B setup. At least for me, I didn't have a trade down in here. There was no, I couldn't call that a legit trade. This was outside of my macro. So what would have won? Nothing. Other notes. Missed 1B trade loss. So really, this would have been a minus 3R day no matter what. Don't really care about my performance because I'm just trying to discover what's up with January. So other delivery notes. PA is still kind of meh. It's not great. Meh, deep retrace. Delivery was just bullish. So the pattern is that right? 5R. So here would have been 3R. No, that's 2R. Because this is minus 1R. I missed this trade, so that would have been 2R minus 3R. So let's keep going. So got all that cleaned up. Let's go to the next open and zoom out as usual. So here's that Monday, or is it Tuesday? So here's that, well, we're on the daily chart again, and here's that daily C2 candle. Then Wednesday closed above, forming not only a C2, but a change in state of delivery. We have this fair value gap. We have this volume imbalance. So I would typically include the volume imbalance in the fair value gap. So we could easily see this consequent encroachment met right there. So here on the 4-hour chart, coming into this 4-hour fair value gap, we have some trend line liquidity right there. The 2 a.m. candle did a stop hunt down into this 4-hour fair value gap. So this is Wednesday. Do we have any news? Yes, core CPI. So that was the 8:30 news, probably. Going down to the 1 hour. Or no, was not. Looks like London overnight did that. So what do we got here? Let's pull up ES and YM. So we have this low here. Looking for any bullish SMT. Not really seeing any bullish SMT here on the 1 hour. So again, London took Asia's high and low. We'll mark midnight open. And we'll mark 9:30. And let's keep going. News high, news low is significant. News high was already taken. And click forward. All right, 9:30. So going out to the 15-minute, we do have a bullish SMT into this 15-minute fair value gap. We have a 1 hour gap. The assets are bullish. NQ is the weakest at the moment. We are far away from 12 a.m. Trying to look at what we have for targets. So here, is a 4 hour fair value gap, which it could be wanting to reject off of, but I'm assuming bullish. So for targets, I'm looking for like equal highs, which we have. These are way away, which are relative equal, if not more trend line. So we do have this kind of as a draw on liquidity, which I didn't mark it on the daily chart. So on the daily chart, I'm thinking that's the draw on liquidity. So here's the daily fair value gap. You can see there's room to that consequent encroachment. So here's a 15-minute. So here's a little inversion. We do have a bearish SMT up at this high. We do have some relative equal lows and the news low below. This is probably an instance where I would sit out, where I couldn't see it totally clearly. But for the sake of this experiment, we can go ahead. IFVG breaker. This is a B plus setup. A 15-minute. So we do have a 15-minute fair value gap in liquidity. We have higher time frame equals. It's with order flow on the 1 hour to daily. It's in the macro. But the cons with this setup are it's a B or a B plus or whatever, B plus. It's 9:30. It's got a news low below. It's got equals below. So here, I would probably be pretty hesitant on this trade. Probably do something like that. So I got it. My gut is telling me it's going to smack this and head for these news lows. But part of my experiment is taking these B setups. So, all right, expand it away. Let's see here. My target's set, so I can move pretty much 1R already. So I'll go break even. So smacked that. So this one was a break even. And right here actually is maybe the short, which let's look at the 15-minute. So no SMT. Now let's see this. I generally don't like cherry picking a single candle like this one right there. But I guess this right here, this whole swing would be an SMT. So we have this 1 hour gap. We have SMT. So here on this setup, we have a IFVG, and this one actually doesn't look too bad. I might give this more like an A. IFVG A. We have a 1 hour fair value gap. We have a 1 hour candle. We probably have a 4 hour fair value gap. One hour liquidity was clearly swept. We have a 5-minute C2. We're inside the macro. This is so the cons on this though are it's against the pretty much all order flow other than the weekly. The high probability target, news, low, and 12 a.m. We'll give it a shot. I don't think it's going to really give 3R. Probably go to the news low, but my system says go 3R, so I go 3R. Coming for my stop, more than likely. All right, I was wrong. So 1R go break even. Okay. Two break evens. So now, here we have another inversion. Looks not great. Didn't take news low. But my rule is I can't take it. I already took 2 trades. So that would have been a break even. All right, so this short here probably was the trade. Let's see. Okay. Would have probably given no entry though. So I'm not going to count that as anything that I missed. All right, so here news low was taken. That's just looking bearish. And this low was left alone. So here's a close above this one, midnight. So here's the inversion. I wouldn't be longing this, but for me. So now it's lunchtime. We can just go to the 15-minute chart, play out the rest of the day. Uh, 2, 3 o'clock, 3:15, 3:30. All right, let's look at the 1 minute, see if there's anything. So here's a lunchtime short, but I don't trade lunchtime. So do I count that? No, because I'm not. I take 12 to 1 off. So what happened this day? We had 2 break-even trades. So this wanted 1 level higher before, like, it. Look at this. I mean, the idea was right. The narrative was right. Here, this candle would have closed below that breaker, and maybe that could have been a trade. So I will count that as one I missed. I can do that. Would have given 3R. So we had 2 break evens, 1 missed trade. So we had break even times 2 on B setups. And then 1030 short would have won. Missed 1. Yeah, it's a B setup. B, W. 1030B short. So that would have been positive 3R. But my rule is I used my two bullets. And then here's a long, but just don't really have any significant levels that I could get behind on that one, I don't think. So it's not like it even took a session level. So there we go. That's what it is. I took my shots. And what's the price action look like today? Sideways. Consolidation. So still just not the best PA, you know. Let's keep going. We're on Wednesday, so let's look at go to the next session. And we got Thursday. 8:30 PPI. Oh, 10 a.m. Fed Chair Powell testifies. I forgot that for yesterday. I have an indicator in my trading view that lets me know when the news is. Didn't really do much though. All right, so resetting this chart. Let's go back to the daily. So the daily didn't hit the draw on liquidity, which was essentially, we'll do this. Just shy of there, and then also here. So here's previous day high. So there is this gap down in here too. Let's look at the 4-hour. 4-hour did have a change in state of delivery. 1 hour is just sideways and floating up. I kind of feel like what it wants to do is it wants to come up here and take this, and then go like that. That's kind of the feeling I'm getting. We shall see. There's 12 a.m. There's 9:30. No news to worry about. So there is the news, a little ugly. So we do have a news low, still intact. And let's go to 9:30. Okay. Ooh, interesting. So didn't take these equal lows, didn't close above that volume imbalance. That did close above this volume imbalance. This is looking like seek and destroy. Tapped into that 15-minute fair value gap. We have a 15-minute C2 and a 15-minute, I don't even know what to call that, FU candle. We do have SMT at these lows. So this is a setup that would be kind of with the bias, the bullish bias, but against the narrative for me. I feel like it wants to go lower. It would be like that, which maybe it gets there, maybe it doesn't. So this is a B IFVG. We're in it's a 15-minute continuation setup. B IFVG from a 15-minute fair value gap. I think I wouldn't take this trade. And this is where I'm getting a little maybe confused if like I'm trying to track all of the B setups and take them. Sometimes they were just ugly, but with my bias. In this case, it's against my bias and I wouldn't take a trade. So like, should I be taking it? I'd much rather short. Because I don't imagine without some significant manipulation, it's going to go to the draw on liquidity. So that's where I'm just getting a little, trying to figure out what I want to do. Because then it becomes really hard. It's discretionary. You're cherry picking the setups, you know? And that's what I said I wasn't going to do. Because I found when I cherry picked them, I tended to cherry pick the wrong crappy setups. So, and if I would have taken just every setup, I would have been profitable for those other 2 weeks, other first, second weeks of January for 24 and 23. 15 minutes. So we do have 15-minute SMT. We have daily fair value gap, target. We're in the macro. At this point, I guess I kind of don't care a ton. Cons is news low below, trend line equal, lows below, against gut, against narrative, but it is with the bias. So we'll just see. Because what my data showed me is if I just took all the setups in the other 2 months that I tested in the second week, I would have been up. And maybe this week will be different, but I think it's going to stomp on me. What do you think? Oof, ugly. So here is where I would be, I'd be getting out of this if I had taken it. Was that 1R? I was like not quite 1R. Um, just let it play. Ugly. So here I took a B setup. Against my bias. I thought it wanted to go down first. So let's see what happens. There we go. Now here would have been a really ugly bias aligned short. So that would have been out of the macro. This would have been in the macro. And that gave 3R. I was just, where did I get out of this other trade? So yeah, it formed. So I wouldn't have been able to have taken this trade because if I would have taken that trade. So I'm not going to count that as a hesitant trade that won. All right, 10:30. So here we came down. What do we do? Still left some equal lows down there. So I'm still feeling bearish. Oh, I was just going to stop. Sometimes you can't stop the clicking fast enough. So 15-minute. So here's so there's no SMT. I couldn't have taken a continuation short here. All right, so we came down into this 4-hour gap, this 1-hour gap. So this is one of the situations where the gaps are too huge. You could use this lower inversion. I've done that before. I also feel like it might want to roll over before coming into the consequent encroachment of the gap. There's no confirmed SMT, so I can't really do anything here. Forming some equal lows. Okay, so in this consolidation, here's this gap. So the 15-minute did form a C2. Now we have some 15-minute candles down here to potentially give some SMT, which there is no SMT, so there's no trade down here. I'm not even sure if it's at the level yet, but so just kind of a nothing burger. Have I taken one trade today? Yeah. All right, so I still have one more bullet for today. See, that's what I was saying, thinking it might roll over to come back down and finish balancing out that gap. And really, that candle right there, I know it's lunchtime and I don't trade lunchtime, but what keeps happening is the reversal keeps coming. I've seen a number of days where the reversal comes during lunch when I'm not trading. So we do have bullish SMT forming on this 15-minute candle. This is the 1230 candle, so it's not confirmed because it closes at 45 after. But so here on the 1 hour, we came in, we actually smacked really far down into that gap. There is this low down here. So the 4 hour is pretty dang deep into this order block. If it were me, I would be more patient and not take this trade. Well, I mean, I guess it is me, but I'm trying to take the setups. Although I guess what the pattern I've done is if it's during the lunch hour, I don't take it. So I guess that's what I'm going to keep doing for consistency's sake. Which looks like it treated me right. All right, so 1 o'clock. So here's a short opportunity. Now, this is bullish, coming down into the consequent encroachment of this range. So here we have a breaker. And really, this is like a zone where I would expect it to respond and continue bullishly. Oh, there's a daily volume imbalance right there, though. Yeah, so like for me, I would have a really hard time shorting into that. But it's like, here's a 15-minute gap. Like, I don't want to take this. I would let this go. But I told myself I'd take the B setups. And I didn't specify Gosh, I really don't want to long that or short that. Let's short it, because that's what I told myself I was going to do for this week in particular, is I was going to take the setups. So we took the lunch high, and so here is a IFVG-B that took the lunch liquidity. It's a 15-minute continuation. Took the lunch liquidity. It's got it's in the macro. No, it's not. It's outside of the macro. So no takey. I guess that saved me from having to make my own decision. So here, the long that I wanted to take was the trade, but look at that deep retracement. So I would have been stopped out at break even. But again, I couldn't take that because that's the lunch hour when I'm away from the charts. This is not fun trading January. All right, coming up to 2 o'clock. No model. All right, so it technically closed below that inversion after coming into this 15-minute gap. It's outside of the macro though. It's going to drop, right? So I thought about stopping to look for some bearish SMT. All right, I'm not seeing any bearish SMT, so I'm not going to consider that a missed opportunity. 230. Three o'clock. So yeah, I'm going to consider this day over. I'd be done trading by now. So what do we got? We had one expense today. And let's take a look at that. And it's hard to say because I was in this trade, so I couldn't have taken this ugly inversion that formed. So yeah, you couldn't have taken them both. So how do I document that? So expense times 1, B setup, miss times 1, B W in trade. There was a 950 short. PA is still meh. Delivery, just bearish. All right, so how do I want to? I'm going to calculate this for -1R because you couldn't have taken one and not to, and then that's, oh gosh, just a tough call. this thing looks so much like consolidation. I pretty much wouldn't have even considered it. Like it was a really good looking setup, then maybe I should count it. But because the short here is just so dang ugly, I don't think I'm going to count it. All right, so I'll remove those 11 drunks. Oh, one more thing I need to add here is I keep forgetting to do this, and I hope that I'm not. I took this one, and this was a loser. And I wish I would have done a better job of putting the date, so maybe I'll start doing that, where this is the 22nd. Because like, did I record? I don't think I recorded yesterday's losses. We have, or wait, 2 break-even setups, missed 1 winner, 1 B win. So yeah, I should have B win in there. Because I couldn't take that one. All right, so this is Thursday. We're down 4R on the week. Let's let's go to the next session. This is Friday, last day of this week. We have 8:30 news, but all right, so look at this on the daily chart. So here was the draw on liquidity, was the consequent encroachment of this fair value gap. It came shy of that. So we were rejecting from it. This is the draw on liquidity for the day or the week, updated. We didn't come to the rejection point. Sometimes it does that. If there's SMT, it won't come to the rejection point and it'll fall lower. So overnight, what do we see? Where's the 2 a.m. 22? 2 a.m. candle. Did a little bit of a stop hunt into that fair value gap, right up into there. Same thing on the 1 hour chart. No bearish SMT. Oh, there is right there between these candles. So there's a bearish SMT pushing price down. However, since yesterday, there's been little retracement back into this range. And not that it couldn't, like it could do a deep retracement and still be bullish. Like it could come down into the 786, 618 zone and still be bullish. So there's a possibility for longs down in here too. You know, I could long here and I could short there. All right, so here's the 12 a.m. open. And 9:30. Let's see what it does. All right, 9:30. Is it just going to blast off? Yes, it is. Like it likes to sometimes in January. Okay. Little order block for continuation. Back to 12 a.m. Coming up for these highs. Another order block. Okay, just continuation. All right, so there's actually a nicer looking inversion. Does have a little bit of trend line there. Came back up into this 1 hour gap. So is it bearish? Is it bullish? So right up into this gap. You know, the daily tells me it's bearish. So we do have SMT at these highs forming, it looks like, but not a super significant SMT. I mean, well, there's all this SMT, but that's not confirmed and that could fail. So there is SMT between these highs and this candle. The time frames are not aligned because the 1 hour is making a inversion breaker, change in state of delivery. 4 hour did a nice stop hunt. So let's find out. This is a B plus. This is a 1 hour fair value gap. We took a lot of liquidity. No, we took a 4 hour fair value gap. So I'm expecting this to be a breakaway gap. Kind of looks like it could be a consolidation too. I see this as low probability any which way. So I'm kind of getting tired of writing these out. I'm just going to take it. This is not a trade I would be stoked to take. So if it was my discernment, I would let this go. Looks like I'm wrong. At the very least, it's break even. Or, well, actually, now I say that, I have a bearish bias. So I might actually consider this. But how to break even? And just not going anywhere. All right, so here's an ugly inversion. Let's take a look at it. Okay. So we have this ugly inversion. It's against my bias. The 1 hour could still want to come up into here. 15-minute, let's look at some of the other assets. So we do have a bullish SMT. We do have a tailless candle. Took this high, so we have a bearish SMT. We do have bearish SMT forming. And did I say? Yeah, I said we had bullish SMT. So I give this this is again a B setup. And I think after I'm going to do this, finish today taking B setups. I don't think I'm going to keep taking B setups. So for the draw on liquidity, part of the bullish argument is this 15-minute candle does look nice. We do have tailless candle above. I feel like the fact that it retested this consolidation phase tells me it's going to go higher. But so let's see here. 18, 19. I guess technically the macro is 1020, but it did take all this trend line. So whatever. I don't care a ton. I don't care a ton because I know what I already know what it's showing me for January. Like I shouldn't trade it. Or second week. Gonna come for me. So there we go. Another expense. So that's my 2 trades for this day. What we can do here is let's zoom out. Let's go to the 15-minute chart. Just finish the day out. $12, 2:30. So just consolidates the rest of the day for the most part. This gap right down in here, I would have been interested for some longs. So where was my short or my long expense? There was no gap there. No gap. So here at 130, 140. $150. So, I mean, that would have stopped me out. So I'm going to consider this one a loss plus my expense up in here. Okay. Wow. This stuff's wild. So that one and that one, this is on 2-23, both of them. Both losses. And when I look at this, red day, expense times 1, and then break even times 1 on a B setup. And so then it would be bull and then consolidation. So really, this is a -1R day. So there was almost no way, at best, you would have been break even on this week. This is wild. And of course, I'm down like 5R probably. Let's look. Yeah, down 5R. So, gosh. Okay. So let's this is the last of the 3 years I'm back testing the second week. So the theme here overall for this second week in January here is many B setups, but even these often failed. No, at best 0R break even week. In my case, I was down 5R. So I took 5 losers this week. So overall, better sitting on your hands. And that was a little different result from the other two second week in January's that I backtested in 2024. Here was the second week. I kind of just took one loss. And in the end, had I taken all of the missed trades, the ones I missed, I would have been up 4R. So it was either take all your B setups or don't trade. Similarly, for 2023, this whole week, I took 1, 2, 3, 4, 5 losses, I guess. I started trading more aggressively because I started taking the B setups, but I didn't take them all. And because of that, I picked all the wrong ones, apparently. I could have been at best up 1R. So 2024 showed me that I should just take all the B setups. 2023 kind of said, well, you could be up 1R if you took all the B setups. Oops. 2022 said you'd be at best break even if you took all of the B setups. And like my rules impacted that because if I missed this one winning trade because I used my 2 bullets. So this is telling me, wow, this is wild. Like telling me similar to the first week of January, it really isn't worth my time to trade the second week of January. Price action, PA was meh. That was the word I used this week, meh. Lots of retracing, mini B setups. Like, let's look at the price action. I'll just screenshot that real quick later. I'm going to remove these 7 drawings. So let's look at this week. Friday, Thursday, Wednesday, Tuesday, Monday, Friday, Monday. So here's this week. And this is what's so interesting. Price was actually distributing. Like on the 4-hour, this looks reasonably acceptable. Here's a breaker. Here's a fair value gap. The breaker is right there. The retracement is a little deep, not totally unacceptable. Down to the 786 or so, 618, 618, 786, like a totally acceptable retracement. So here on the higher time frame, these candles are moving well. So it almost just makes me think like, in January, are you better off on like a 15-minute chart or a 5-minute chart than a 1-minute chart? Anyway, so zooming out. And I guess that's an important note, like 4-hour PAs, So higher time free PA looks good, but lower time frame PA was meh. And I think that might be important because I don't want to get fooled thinking price action's good when it's not. So for this week, I took all of the B setups, regardless of bias, gut, etc. So that shows me a few things. Looking back at the trades I hesitate on. So it was interesting for a little while. This was like up in here, it was starting to look better, and the win rate was reasonably high, 52% or something, like right here. And then look at all these failed B setups. So they tend to come in waves. So here's a green wave, there's a red wave. Obviously, we can't predict the distribution of these things, but 41%, it's actually still profitable-ish for me. I think 35% is my break even, or is it 30? I forget. So it still suggests that I could be a little more conservative, or excuse me, open and liberal to taking trades, but that it comes in waves. So like I wasn't taking all of these winners up in here, right? I didn't take any of these. I didn't take most of these. I only started taking a bunch of these. I think I took those two. Or no, I skipped this one and I took this one. Okay. And so, wow. All right. The other interesting thing I'm noticing is the psychology is starting to get to me. Not so much the number, interestingly enough. This minus 10K doesn't bug me. It's the losing streak. So here's 5 losses in a row. And if we looked at, I'm going to pull up all 3 of these, or I can't, can I? Here, yeah, so here on the yearly calendar, so 2024, I'm down 2R, down 5R, down 5R. That's pretty sucky. And I think I'm on like an 11 trade losing streak. If we look at all the trades, they won't be in order. I have not had a single win in this series of, how many trades are here? 19 trades. I've had 1, 2, 3, 4, 5, 6 break evens, 14 losses. That's wild. That is like, I don't think I've had a losing streak nearly that bad. In my other tough times, I at least get some wins in. And this is just unreal. This is like, it's bugging me, like how bad it is for me. And I'm noticing how it's affecting my psychology. Like, it kind of makes me want to stop backtesting Januaries, and it makes me feel like I need to go backtest any other time period to kind of get my confidence back, which I was super confident going into this backtesting experiment. But I'm just noticing it's eroding my confidence, even though I know that January I probably shouldn't trade, and I was just backtesting to find out for myself. But it's just so wild, to me at least, how our psyche works, and how, despite knowing that, I still am feeling like I'm questioning my ability to trade. Like I don't know how to trade, you know? But yet I know that's not true. So I don't know. I feel like there's a lot inside of my head at the moment. I'm struggling to maybe get it across. But I guess that's plenty enough to wrap up this terrible but insightful backtesting session. And so at this point, there's still the 3rd and 4th week of January left to do. And I guess I'll have to slug through those and figure out if they're worth trading.